All right, welcome back, everyone. John Caruso here for Wednesday, November 16th. We're going to zero in here on the December Euro currency. There's a lot of technicians that are putting out some material on the Euro currency right now, suggesting the beginning stages of a bottoming process is currently happening, which is interesting. And I do agree with that. However, I do believe that you can make money on the short side of this market over the very near term while that bottoming process is still developing. Now, there's a lot of talk that we are in the beginning stages of an inverted head and shoulders bottom that could potentially be forming right now. Obviously, what we're staring at here on the chart is a very bearish longer term look at the euro currency. And if I actually go out to a weekly, you can clearly see that defined downtrend in the euro currency. We did get a big upward thrust last week in the euro. A lot of that came on the news of the cooler than expected 7.7% reading of United States CPI. So right now the market's trying to price in that dynamic of a less hawkish Fed versus a more hawkish ECB. And that's why you're getting these movements in the currency. So perhaps you can see the developing inverted head and shoulders a little bit better here on the weekly chart as well. So as we can see right over in this area where I have the dotted line, this looks to have formed a left shoulder. This structure right here would be the head. And now what we're going to look for is for this market to potentially start to build in the right shoulder before perhaps this market has something bigger to say on the upside going out into the beginning part of 2023. So we're going to go back to the daily chart here. Taking a look here, as you can see, I've got us my dynamic ranges here. We did tap the top of the range here today, right around 104.40. We've got the 200-day moving average right here, and of course, we've got this long-term downtrend trend line resistance that comes in as well. And currently, the market is respecting that longer-term downtrend. So, why we think you can make money for a trade on the short side here is clearly all of this resistance that we've got. We've got the dynamic top of the dynamic range right here, the 200-day moving average and trend line resistance. So what we're expecting to happen here in the euro currency over the very near term is we're looking for a pull down, and at a bare minimum, we could get a drop off to this 102 area right here. This 102 area comes in. That's the same level as this peak back here that was once resistance. You can see the market twice has gotten up into these areas and failed. So a retest of what was once resistance now becomes support, which takes us down to about 102. So a move from 104 currently down to 102, that's a 200-point move in the euro currency. That's a pretty nice move for a trade. So that's kind of the bare minimum case that we're making here on the downside for the euro currency. Then, of course, we could potentially retrace a little bit deeper. That takes us back down to that this key level down here, which would come in down along 100 or par with the U.S. dollar before perhaps this thing holds, chops, and has something bigger to say on the upside going out into 2023. So that's kind of our immediate term outlook on the euro currency. While we're waiting for this longer term inverted head and shoulders to form, we do believe that you could probably take this for a short side trade over the very near term and capture a move back to 102 at a bare minimum, and perhaps on a steeper, more aggressive retrace of this rally back to 100 or par with the U.S. dollar. So that's just a quick look at the December euro currency and how we're looking at playing it going forward. Best of luck to you out there.